Now, let's see how Dean would use the employee portion calculator. Since Dean and his employee are paid monthly, he would download the monthly payroll tax calculator. We will enter the remuneration for April, May, and June. Ensure to select Enable Editing. We will select Schedule A to enter the information, as this is the Input tab. Enter the tax ID. Using the drop-down, select the first pay period start date that reflects the first date of the pay frequency within the fiscal year. Note that although a new company may begin operating later in the year, you must select a pay period in April that coincides with your pay frequency. This will ensure the spreadsheet populates with the accurate pay period calculations. For example, if the company's payroll is monthly and the start date is July 1st, then you will select April 1st in this section. The current month end date will be the date the employees are paid. If you are entering April 30th payroll, you will select April 30th in order to have the black areas open to aquafill boxes so the remuneration can be entered. Enter the staff identification number for each employee. Enter the staff name of each employee. Enter the start date of each employee. If the employee has been with the company prior to the start date of the applicable fiscal year, you will enter the first pay period date that was selected above. If they start later in the year, you will enter the actual date they started. Employment end date will be used if an employee leaves the company. This date must reflect the last day in which remuneration was received by the employee, which can be up to 3 years after leaving the company. You will enter the total remuneration received by the employee under each pay period column they receive remuneration. For April, May, and June, Dean receives $10,000 monthly in salary and Jane receives $6,000 monthly in salary. So this will be reported under recurring. We will enter the remuneration for April. We will now enter the remuneration for May and June. To do this, we will select June as the current month end date to open both months so we can enter the remuneration. In addition to Jane's salary in June, she receives a $1,000 bonus, which will be recorded under one time. Please visit part 6 of the tutorials for information on recurring versus one time. Best business practice would be to complete the payroll tax calculator each pay period so that you can ensure the correct payroll tax obligation is being withheld from the employee. Schedule B has been populated with the withholding from the employee's salary. As we have June as the current month end, it is reflecting the withholding for June. Schedule C has been populated with the employee portion tax information for April, May, and June. This information will be entered on the employee portion of the payroll tax return. Schedule D shows the calculation on the annual rate of pay based on the remuneration entered. For a breakdown of how the calculators determine an employee's annualized remuneration and the tax amount to withhold, please view Part 3, Illustration of Payroll Tax Calculation.